Hi there, everyone. My name is Dennis, and I'm here to open up your eyes on something big. Something really big is coming to the markets. Something real big is coming to this world. And I'm here to open up your eyes with this video and show you exactly what is going to happen and what you can do about it. In this video, what I'm going to do is present you the evidence and the analysis, and you can then be the judge and jury. Many of you who have been on our website probably seen this picture that you see right now. We are long-term buy, ask us why. Well, this picture was mainly for gold and a few other assets, but in this video, I'm going to answer that question. So now, let me briefly state something before I begin, of course. Something really fucking big is gonna happen throughout 2017 to 2019. Even this week, trading week number 3. Something big's coming with the GBP. I can just feel it in my bones. But I'm gonna give you all the answers to this throughout this video. So just stay tuned, and I'm pretty sure you're gonna enjoy it. And hopefully, if you do the right things, you're gonna be able to profit from it. So the first thing we're gonna talk about is interest rates. So the first thing about interest rates, especially negative interest rates. Let's talk about how silly this is. Think of this as an investor. Let's say you lend me $1,000 right now. With negative interest rates, your $1,000 borrowed to me would depreciate in value. That means if I give you back your money in 2 years, it would not be 1,000, it would be less than 1,000. So think about that for a second. So let's ask ourselves how we came here. How did we come to a world where 1/3 of the world is in negative interest rates and 1/3 of governments are losing money even though they've borrowed money to someone in a sense of gaining the funds, they're actually losing? Well, we came here from experiments. To be more direct and correct, experiments by central banks. Central banks across the world have done far too many experiments which have caused massive collateral damage, and this is where we are right now. This is the world we live in. So think of it like this. In 2008, 2007, 2008, when that big crash happened, the central banks had room to work with, and that room was lowering interest rates, and that's how we survived that crash. Right now, there's barely any countries which can lower their interest rates further. Most of the major economies are in negative interest rates. I'm going to come to all of this soon. I just wanted to go over the interest rate subject just a little bit in this first 3 minutes of the video so we can all get a hang of what we're speaking about, and obviously for you guys to understand, girls, to understand these major points. For example, how negative interest rate works, how much they, excuse my language, fuck the other person. Anyway, let's continue. Going to be the driving force for these big things I'm talking about. Let's start from the US. Okay, so economic data. Economic data in the US is actually showing very similar patterns to the last recession we had, which started in 2007. Okay, 2007 it started, and I'm going to go over a couple of things which are extremely important for the Fed's decision whether to hike or not. Now, corporate profits have and are declining in the US. The real USD GDP growth is actually slowing down. US export growths are also weakening. Factory orders are really bad at the moment. Also, retail sales are nothing special, and I believe they're only going to get worse by the end of the year. Now, moving on to the US, let's go to the unemployment. The unemployment picture is not as bright as you might think. Most people think that unemployment is actually at 4.9, 5.1%. It's absolutely not. There is something called the U6 unemployment figure. I want you to research this, okay? Do me a favor. Do yourself a favor. Research U6 unemployment rate. Now, when you review that, you'll realize that it actually jumps to over 10% because this actually discounts people who are working on part-time basis or who are going from job to job. It looks at the main factors of the economy. It looks at the main people who are working in the economy. So that's what it covers. And the U6 unemployment figure actually shows you who is actually the driving force of the economy. How many people are driving the economy? It shows that it's above 10%, and it shows that it's heading higher. Here's another bubble in the US. Just like the housing market, we have the student loan debts. The US government actually backs nearly 100% of student loans. So when they do that, rating agencies actually pin a higher credit rating to these debts. Even though the student may not be actually able to repay this, they still do it. And right now, the US government is owed over $1.2 trillion in outstanding student loans. And these student loans need to be paid back. For you to understand the sheer size of this, Australia, which is a pretty strong world economy and a very big country, has a GDP in 2014 of only 852 billion, and the student loan debts in the US are over 1.2 trillion. So let's go to something else. Let's go to Europe. Europe is in a lot of trouble, and I believe after this week we might see even more issues happening in Europe. We're right now in trading week number 3, October 2016. I believe that there could be even more problems in Europe, and I'm going to make a special report on this by Thursday. Now I'm going to make you imagine a basketball, and that basketball is China. And I grab that Chinese basketball and I throw it up in the air, and that ball is climbing and climbing and climbing for many years, until one day it starts dropping down, and it hits the ground, which was last year, and it bounces off, which is that little recovery it had throughout some time. Now the Chinese ball is actually falling back again, and if it hits that fucking floor one more time, I'm telling you that there is an excellent chance it's going to break and shatter that floor, and it's actually going to take us all down with it. So for me to summarize this, we could be on a verge of another recession. Patterns in the economic data are actually showing signs of weakness, and the troubles persisting in Europe or the bubbles bursting in China may actually be the trigger that sends the economy over the edge. We have Deutsche Bank, we have so many problems happening, we have Syria, just in Syria we have so many global powers fighting. We have Arabic nations, we have the Western world, we have the Eastern world, we have everyone in one little country fighting. And there could be something bad happening there, you know? So, unlike 2008, when central banks were able to actually lower interest rates and expand their balance sheets, central banks right now have much less room to work with. They basically have, they can't do anything with monetary policy to actually prevent a recession from happening. Recessions are a very normal part of macroeconomic cycles that the world actually experiences, and they happen all the time, and it's nothing to be scared of. The last recession was already 7 years ago, right? That's when it ended. Signs may show that the next one is right around the corner. I personally believe that 2017 to 2019 will be that big recession, and it might actually hit really strong in 2019. So what we need to do is prepare for this, because there will be plenty of opportunities for us all to make money. What we have here is something called a rounding top. This usually, well, not usually, always is an extremely strong indication of weaker movements. It is very rare. It's very rare to come up, but it seems as if we do have one here. And this is the top of the S&P 500. This is the daily chart. And as you see here, I've added this circle, and it's pretty much popping inside the circle. Apart from this area here, everything else seems to be working. So what I'm seeing right now is price moving highest to the moving averages here, which is the white and red one, which is the 20 and 40 days, before moving significantly downwards and possibly targeting the 2000 area. So that's for the S&P 500. We see it going down. We see a sorcerer up here, basically a rounding top, and rounding tops are, like I said, pretty rare in the markets and sometimes take days, weeks, and even years to form. This one looks like it's forming in dailies and basically a couple of months. And I think that it's actually going to work out. So anyway, we're going to sell this. What we have here is a symmetrical triangle. We can see it on a daily chart, and it works really well on a daily chart. And you can see it also on a weekly chart, and you can just see how powerful this channel has been. This is a really strong channel, and it seems as if there should be a break soon, but not before price moves downwards to the 1000 area. So like I said, I believe something might be happening in the markets this week, something potentially bad, possibly in the world, which will move the S&P 500, the DAX, and other pairs pretty strongly. Now here it is. On Thursday, which is tomorrow, we're going to be holding a workshop, but it's a part of the Nest. The Nest is a very premium and exclusive, and probably our biggest niche. Um, we're charging 10 euros for it. You can see more information on our website about this, but the Nest is something where we're going to be providing a hell of a lot of information, a hell of a lot of value for pretty much nothing, for 10 bucks, 10 euros. Anyway, the DAX seems to be going down today, tomorrow, possibly by Friday, we could see it head pretty strongly down. So anytime between today and Friday, I think it might be either tomorrow or Friday, but that's something I just can't predict to the dot. So if you want to see more pairs, if you want to see more trading pairs, if you want to get more information about the DAX, the S&P 500, and so much other stuff, well then enroll into the Nest, and I promise you'll be extremely satisfied.